Good morning and welcome to today's pre-market video. Now in today's pre-market video we are going to be taking a look at three things. The first is the Fed. Now everybody in the rate cut is only worried about 25 bps or 50 bps, but that is not the important thing. We're going to be looking at what the most important thing is you should be paying attention to. Secondly, we'll be taking a look at the Nifty Expiry. I'm going to take a look at what option buyers should do with it, what option sellers should do with it, and the simple price action analysis of it with the key levels to watch. Thirdly, we'll be taking a look at Reliance Industries. Reliance Industries has performed exactly as I predicted in my last video. It's fallen to the support, it's held at support. Now we'll be looking at what is next for the stock in terms of equity buying and also in terms of option trading, whether you're an option seller or an option buyer. So basically that is the outlook for today. And first let's go into the news, which is basically the Fed. Now, as of the time I'm recording this video, the Fed rate cut announcement has not occurred yet, and tomorrow morning when you're watching this you'll be knowing whether it's 25 bps or 50 bps. Now I believe if the cut this time is 50 bps, the markets will go up, but they will go up for basically a few days, then they will fall very badly. This is, if you look at the historically, whenever the Fed has started the rate cut basically period with a large number, it has not boded well for the markets. So if we have a 50 bps rate cut, start planning to take profits in this rise from most of the equities you're holding, as after that they're going to come down pretty hard. If it's a 25 basis points rate cut, that will be rational. The market will basically push it aside, and the main thing that people will be focusing on, investors and traders on the professional side, will be the trajectory and the words Jerome Powell speaks in the question and answer session. He usually has about half an hour after he announces the rates. So that is going to be key if it's a 25 basis rate point cut. But according to me, the real information everyone will be watching, whether it's 25 or 50, is the dot plot. This is the dot plot, tells us how many rate cuts will be there for this year. Now, as of before this Fed meeting, it was being said that there will be 2 rate cuts this year. Now, if he does a 50 bps rate cut, those 2 rate cuts are technically already fulfilled because average rate cut is 25 bps. So he'll already have done that. So now we'll have to see, definitely it's going to be above 2, whether it's going to be 3 or 4 interest rate cuts, which are scheduled for this year. As whichever is high, that's what is going to affect the markets mainly. So I believe anyone who is trading in terms of equity buying rather than F&O trading, this is option trading, we're looking at what's going to happen in the next 1 week expiry or max the next 1 month expiry. Beyond that, option traders, we do not basically have a bigger outlook than that. When you think logically, you are not going to go and start trying to look for options in a very far away time unless you basically don't have much to do. But on the equity trading side, equity investing side, that is where this information is going to be very key, as it will say, number one, if you're going to have a pullback after this sudden up move due to the rates, and how deep the pullback is going to be. According to me, we are going to be going up for a bit, then we're going to come down, especially the Indian market. If you look at most of the charts of the big stocks in the Nifty or whichever, they're not in a good shape. Any up move now will be simply a dead cat bounce, trap in new guys, and then give them a lesson. So that's my point of view. Can be wrong, can be right. Now coming to the Nifty Expiry. Now the Nifty Expiry of today will be a bit more complicated, and the people who watched my Nifty Expiry video, the last one which I put last week, know the levels which are being shared now are pretty similar. This is as whatever has happened, the Nifty has not been able to break my resistance level of 25,480. I shared this resistance level also last week, and we are still at the same point, and we have not been able to break above it. It shows the resilience, number one, of this resistance level, and I was putting more weightage on 25,580, but 25,480 has proven itself, and anyone who wants to verify that can go to the previous videos and see this was shared, and it has, you can see the strength it has shown. Now, with the Fed rate cut coming, whether it's 25 BPS or 50 BPS, that is why I was putting more importance on this. I believe as long as the Nifty is trading between 25,580 and 25,200, this is a zone you can expect jewelry moves. However, for example, if the rate cut is fantastic and it gives us the sudden push, if we open with a gap up around here, then option buyers, if it clears this zone and this trend catches black line, has come back above the red line, then that is a long to 25,750. 25,700 is the resistance in between, and most likely 25,750, and if we break the 25,820. But if it starts faltering at this point, even if we have a gap up, then it's going to come back down and you will have dual-sided moves. So now, instead of explaining that, my simple option buying trading plan, between 25,580 and 25,200, I'm going to basically trade both the long side and the short side. I'm not going to discriminate on anything, but I'll look for naturally, if I'm putting 10 trades, I will try to put 7 on the long side and 3 on the short side, as long as we are above 25,200. This is as the Fed rate cut and everything will cause more positivity. So longs will have a easier chance of making money. The probability of longs winning will be higher than the probability of shorts winning. It's simply as that. But in this range, both side trades have to be done. If it breaks 25,580 and that move is supported by the trend catch indicator, mainly the black line, then is when it's a long. For option buyers, a big nice long to 25,750 and then 25,820 if it's able to clear 25,750. Yes, that is a very strong resistance level. On the other hand, by chance the Fed goes and announces something, okay, they give the rate cut, but their further on talks are very negative for the markets, then we can expect 25,200 to break, and then the initial short will be to 25,120. That breaks, that's a major support, will go down to 24,950. So my trading plan is option buy, above 25,580 clean long, below 25,200 clean short. Between this zone, trade both sides, and it's as simple as that. Now, option sellers, what will you do? Option selling comes a bit more complicated for this expiry because you can have the highest probability of having sudden spikes on either side. I would say if we look at this in the past 10 expiries, we know last Thursday there was a sudden spike, and I caught it and I even shared a video how you can catch spikes. Now, this is one expiry we can have sudden spikes on both sides. So, option sellers will have to be more cautious. Now, I believe this is an expiry where option sellers will have to trade like an option buyer. Once if it clears 25,580, then do not enter call sells until it goes towards 25,750, and then you can enter call sells to basically as it will top out there and those call sells will expire towards zero. On the other hand, if it's not able to break 25,580, then I will sell calls above 25,580 and puts below 25,200. Basically, I'll sell the range. So option selling is a nutshell plan. Between 25,200 and 25,580, if it's staying between that range, then I will sell both calls and puts at the same time of both sides and keep them with a tight stop of profit if they're in a profit, or stop loss if they're not yet in a profit. On the other hand, if we break 25,580, let's say open or after half an hour after open, then when I will end up going and waiting for it to rise towards, let's say, 25,750, and then selling calls above 25,750 or 25,700 and letting it then stagger there and decay. This is, I believe, 25,750 will be a very important resistance. Even if it goes to 25,820, it will end up hovering, which by the end of the day, especially between, let's say, 2:30 and 3:30, will bring those options to nearly zero, which will be good. So that's my trading plan on the upside. By chance, if the Fed talks nonsense, and I see we have higher probability of us breaking 25,200, then I will end up selling calls above 25,480, so 25,500 and above, and I'll enter puts the same way. I'll let it fall towards 24,950 and then sell puts in the latter part of the day. So tomorrow's trading plan for option sellers is complicated. It's not as simple as it usually is, that you sell calls and puts at the same time, or you sell calls early and so on. You will have to trade depending on how it treats 25,580 and 25,200. It's as simple as that. Now coming to Reliance Industries. Let's load the chart. Now, if we look at Reliance's daily chart, now Reliance has been trading in a box range for very long, has had certain spikes, and now before I go into it, this is the support which I had given as a target. This is when it had reached my resistance. These are the same resistance levels which I shared earlier, between 308 and 3100. When it reached there, I had said that it has reached the top as we had caught the long. Then I said it's time to short and it will be falling to 2900. It has fallen to 2900. Now, if here it's a bit of also funny trading plan. Why? As long as it's between 2970 and 2900, don't try to trade it. As even if you're an option seller, we are going to get a sudden breakout on one side, and you don't want to be on the wrong side at that moment. So between this zone, leave it. By chance it breaks 2970, then I think there will be a short-term up move due to the Fed and everything, and equity buyers can go long until the resistance at 3080 to 3100. 3030 is the resistance in between, but I think it can be broken. So above 2970 is a long, and then but if it breaks 2900, it's a short to 2820. Now how will I trade it? Now I will not want to buy this as an equity and hold it and think it's going to do something fantastic. If I buy it as an equity on it breaking to 970, then my only target is going to be this. Once it reaches this, I'm booking my profits and I'm getting out. Unless it shows some crazy amount of bullishness in the volume indicator when it reaches this point. And on the other hand, if it stays within this range, I will not touch it. If it breaks this, then it's a short via option buys, but it's not a big one. This is it will fall to 2820 and then hold there again. So Reliance right now is technically in a no trade zone between 2900 and 2970. Breaks to 970, then it's a long until 3100. Breaks to 900, it's a short to 2820. Due to the Fed announcement, higher likelihood of it breaking to 970 and going up in the short term because there will be excitement. But do not think that is an investment buy type of thing. That will be a quick in and out in terms of equity. Literally, let's say you enter on Monday, if that hits the target on Wednesday, you sell and you book your profits. Even in an equity trade, this is as you're not going to get much more, as once it reaches that point, I believe even the other stocks will start stagnating and the whole thing will just come down like a house of cards. So you don't want to be holding it. Let's say you go long, make profit until here, then come back down and make a loss. You don't want to do that. So my trading strategy for Reliance is that long above 2970, short below 2900. Between the zone, don't touch. This long can be done via options, via basically equity buys, however you want. I will most likely do via equity buy plus option sales, or let's say option sales below 3,000 rupees, as we are at basically 19th September, and as we are approaching expiry, the decay will start kicking in better, so you can earn both ways. If it holds this range, I will not do options, I won't do equity buy, I'll just sit out and watch the show. That's it for today's video. Now for Nifty option sellers, complicated trading plan, option buyers less complicated, and you should get option buyers should get some moves today, hopefully. And Reliance as I shared. Thank you for watching. Any questions, drop them in the comment section below or WhatsApp them to the number shared below. Thanks.